an Obama win or a Romney win? Hello, market traders everywhere. Adam Hewison here, president and founder of iknow.com and co-founder of MarketClub with a midday update for Monday, the 5th of November. Make no mistake about it, the markets are going to probably be very quiet today and tomorrow. When the eventual presidential winner is announced, perhaps on Wednesday or even Thursday, the markets will decide which way they want to trend. Here's what the markets are telling us right now. The equity markets are a mixed picture. Metals, mixed picture. Dollar, mixed picture. Crude oil, negative trend. So with 75% of the markets we track in a mixed picture mode, our trade triangle technology is reflecting the statistical tie that the polls are currently suggesting. Only after the election do we expect to see trends once again resume in the markets. Historically, when a Democrat gets elected, the market tends to go down in November. When a Republican gets elected, stocks tend to move higher in the months ahead. I am sure, like many of you, you are suffering from election exhaustion and you'd like to see this election cycle over. Only then can we focus on the economics and trends in the markets. Now let's go to the markets and see what our trade triangles are indicating today. So here we are, we're at the portfolio. A couple of things have happened which I want to share with you, which are kind of interesting. So we're plus 55, which means it's a trading range. And again, this gets back to what we were talking about before, and that is a statistical tie, or what is, according to the pundits, a statistical tie. And I think if we look at these markets, you can see quite clearly you got a couple of positive things in terms of trend, and one of them is the monthly trade triangle, which is pointing higher. You have your 200-day moving average, which is right here, and you're somehow at the bottom of the Donchian trade channel. On the negative side, you're below the parabolic, which is these little dots right here, and also you have a intermediate term trend to be out of the market. So in reality, if you're trading on an intermediate term basis, you should be out of the market right now. So let's wait and see what happens after the election. That'll give you a clearer picture, and we'll go from there. But let's just clear that screen off and go to our next market. So the next market is going to be the Dow, and you can see pretty much a similar pattern there. You can see we're very close to the 200-day moving average, much closer there than we are on the S&P 500. And if we move along to the Nasdaq, you can see on the Nasdaq that we're actually just kissing this 200-day line, but also the parabolic is now turned back up. Mixed picture. 55 is the score. Trading range, we have somewhat a little bit of a bullish divergence, not quite there yet, but it's certainly indicating that this market has going to make a decision in the next day or two, in my opinion. So moving right along to crude oil. Crude oil actually did give you a decision. All of our triangles now are red, meaning a trend is down. This kicked in on Friday at 84.66, and actually this is on Sunday, 84.66, and we're currently trading at 85.05. Very, very quiet markets. Everyone's going to be waiting for the market. My guess is we probably see some, even though we have a sell here, we'll probably see some bounce coming into this market. It's been under a lot of pressure lately. You can see it's very heavily oversold. So moving right along to the euro. The euro, this is a big one. We talked about this all the time, and you can see what has happened here with this market. And let me just clear everything off the screen and take the parabolic, the simple moving average, and that off, and go to a simple line chart. Because if you remember what we were saying last week, one of the concerns we had in this market was the fact that we had this sort of Twin Peaks type and this area here, the 128 level. Now we've clearly moved below that today, 127.81. I expect this market to come down to this level here, the 125 level. And if we put in a Fibonacci, we'll see how that plays out as well. But generally speaking, this market's, I think the euro is going to be on the defensive here for a while, but nonetheless, a longer-term trend remains positive. So let's just put this in here, pull this down, the Fibonacci. So 124.76, right on the 125 level, is a 61.8% pullback, retracement. So I would not be surprised to see the market come back down there in the next several weeks. So let's see how that plays out. Moving along to gold. The gold market's been extremely quiet today. Only the long-term monthly trade triangle is positive. You've had the pullback from the highs. You do have a little bit of a divergence here, and I want to share that with you. So you can see right here, the market's sort of like, let me just get my illustrator on. So you see how the prices have come down here like this. Then if you look at the divergences, it looks like it's just a slight uptick there. So possibly we're making a low here. It's certainly we had a nice pullback from the highs. The longer term trend right here, the monthly is positive, indicating higher prices. So we want to see some form of consolidation to move this market higher. So let's just go and put our other indicators on that we like. That's obviously the Dow Jones trade channels, which as you can see right now, also the parabolic. So this parabolic is by Wells Wilder, who developed this in the 70s, and the Dow Jones trading channels were developed in the 40s and 50s. So let's just put our indicators in there so you can see really we're at the bottom end of the Dow Jones trade channel. I would suspect we'll see a bounce from these levels, but this down day that we saw last week was a very big down day on Friday. And again, the market needs to regroup here if it's going to have any hope of going higher. So let's go to our next market. And that's copper. Copper is pretty much the same way, sort of finding support around the 345 level. Little surprised it came down quite that far. We didn't expect to see it that far, but nonetheless, our longer term and monthly trade triangles remain positive. And I think that we're sort of losing the downward momentum. You can see this MACD, this line here, is just basically getting less and less, sort of it's going up as opposed to the market's prices are going down. Now that's not a divergence, that's just the market's losing its downward momentum. If you really want to be conservative, wait for this market to go over the red line, the blue line crosses the red line. That will be an indication that the trend is perhaps turning back to the upside. So let's play that one by ear. Let's see how that plays out. So let's go to our next market, that's silver. And silver basically has pulled back, pretty nice pullback. If you look at our look at our Fibonacci pullback. Let's just, hold on. Let's put that in. There it is. It's the yellow box there. Just go from the highs, as we do, pull it to the lows. And you can see we're right on the 50% range. Maybe we'll bottom out there, we'll see, but generally speaking, very close to making a turn here. You can see we go very, very close and it just popped down again. It looks to me like we could see something come in here because we're going to go into, if we keep spending money like we're spending, we're going to go into an inflationary phase where these metals are going to go higher. So let's move on to a stock now that is well known, very well traded. Here's Apple. And what I want to show you with Apple is this. And this gets back to perception and how things are viewed in the markets itself. Now, if you remember, we were looking at this market. If we go back here, right here, everyone was saying at that point in time, we're going to go to $850 or even $1,000 a share. Now, at this point in time, Apple was the most valuable company in the world, probably still is, but we've had a pretty spectacular fall from grace from the 700 level down to the 570 level, 575 level, so $125 drop, which is not chicken feed. I don't care what market you're trading, that's not chicken feed. And the question is it going to go lower? Now, if we clear the screen off, and also you'll see, the other thing I want to share with you while I have this up, is all of the trade triangles are now negative. And that's really, really unusual. And let me just clear the screen. I'll show you how unusual that is. So let's just scope this out and get a little bit more of a picture. And the reason I wanted to bring Apple up, Apple is such a large component in the Nasdaq, and this could have really a bearing on where the Nasdaq goes here. So let's just scope this out. So there's the last buy signal right here. And let me just take this off. Here's the last buy signal right here. And that is, hold on. This is on July 7th, 2011. So it's quite a ways back, so to speak. That's the last buy signal we had. The last sell signal we had was on April 18th, and that was 2011. So again, these signals do not come along that often. And you can see, if you look at this market closely, you have probably broken this trend line on the upside. And we can put in our Fibonacci. Let's just go a little bit closer and put a Fibonacci number in there and see how close I think we probably exceeded it. Yeah, we've exceeded it. Not to say I can't have a bounce from here, but generally speaking, the rose is off, the bloom is off the rose, as they say. So again, it's under pressure. I think it's going to form more pressure on the Nasdaq. Also, the iPad 7, the mini iPad, how well it's selling. You've had some major changes at Apple. There may be some more major changes coming in. The competition is incredibly fierce now. So the big lead that Apple had, the unique tools they had, are not so unique. Not to say they're going to fall off the cliff and become a worthless company. I would not imagine that happening, because it looks as though Apple is still doing very, very well, and it still has a lot of great things. And if they can pull off their streaming music programs and streaming video programs, they'll keep doing well. But let's see how things plan out. But again, caution is warranted right now. I wouldn't rush in to buy Apple, especially with this signal that we had at $587 to be a monthly sell signal, a long-term monthly sell signal. So again, if you look at the last time we had this happening, which we have to go all the way back to this period here, this is the April of 2011. It wasn't until July that we had a buy signal. So we could be a couple of months really on the defensive here in not only the Nasdaq, but also on the Apple computer. Hey, I'm Adam Hewison. I hope you're going to vote tomorrow, and hopefully we can get this behind us and get some good markets here where we can have some great trends and some great opportunities. But I'll be back tomorrow with an update, so have a great day trading.